Do you expect to go to prison?
I'm not focusing on that right now. I don't think I tried to commit fraud anywhere here. I was trying to do the best I could. Obviously, that wasn't nearly as good as I thought it was.
I tricked Sam Bankman Fried into a third interview with me, and this time he may have admitted to fraud. You'll be the judge.
And this is a live look at in the Bahamas. This is Sam Bankman Fried. You see him there exiting the courthouse. He has been ordered to report back to prison where he will be held until February 8th. So Sam Bankman Fried denied bail, and here he is exiting that courthouse. Apparently, in response to the decision, he hugged his parents, he shrugged his shoulders, he was visibly disappointed. Here he is in the custody of the Bahamian authorities. The judge jailing the FTX founder until the case resumes again on February 8th. So we will continue watching this story for you.
Now, first, I want to give some background. Sam at no point has wanted to talk to me. I want to explain the background, the strategy that went into this call to try to learn where others had failed. So I knew going into this, it might be my last chance to interview Sam. And because of that, I had to think long and hard about what the perfect line of questioning would be to really pin Sam down, knowing that he's a master at dodging questions. He's done it with everybody so far, including me, by the way. And I mean, look, I think we've got some great stuff, but to this point, I didn't think anyone had gotten that smoking gun. He always denies everything. He always has a sort of a loophole out of it. So I'd have to try a different tactic. And here was my plan. I was going to spend the entire time laser focused on the FTX terms of service. No, is there one-to-one assets? Because that's the whole thing. We're talking about a separation of funds. So those funds should be a completely different, in a different place, in a different wallet than everybody else. What you talked about servicing billions of dollars of withdrawals has nothing to do with those specific digital assets, because that's just first come, first serve, whoever pulled out first. We're talking about people who never agreed to have their funds loaned out, who never agreed to have their funds put on margin. They should have, according to your terms of service, one-to-one backing. It should all still be in some bucket somewhere. And are you confident today, as the CEO of FTX, this has nothing to do with Alameda, are you confident today to say that those are absolutely real and they exist and they're present, people are backed one-to-one on client digital assets?
So I think, and again, I'm just taking a stab here, but I think what happened is that if you look at especially a lot of the withdrawals that happened, those withdrawals were not necessarily only coming from people who never used margin trading or futures or staking or anything else. Those weren't just withdrawals from people who were keeping one-to-one backed, or were sort of just keeping them as pure spot balances. And it was omnibus wallets, between the various categories. And so I think that the answer to your question is that a number of those assets were withdrawn by people who had balances on the exchange, potentially in the few days prior to the collapse. And if you wanted to think about it this way, it could be that that happened, and then when the collapse sort of completed, that effectively meant that there was, if you wanted to put it this way, like fungibility created during those withdrawals between assets for people who had and had not been using.
But that means that there is no separation of funds. If there's fungibility between two different buckets of there are no buckets. It's just one bucket. Everyone's taking out of the bucket, which means substantially anyone who had your terms of service with digital assets wasn't actually subject to that terms of service. They were subject to the same terms of service of your margin trading, right? Which is your more risky product. So you subjected everyone to the higher risk product because fundamentally, when it came down to it, you're saying there's fungibility. It's $1 here, $1 there. Everyone can take out $1 as fast as they want. Don't you see that as like defrauding your customers, the people who trusted you to just say, hey, this is not going to go anywhere except for we're not investing your assets? If I can exchange one-to-one, and I'm the one who put risky stuff on with risky assets with risky terms of service, I can take the money that someone who didn't sign up to those same risky terms didn't agree to. Isn't that fraud?
So I'm specifically talking about what happened in the days immediately during and following the crash, in that 3 or so day period, um, and during that period, um, I think we may have allowed just generalized withdrawals. I think that was um, if you're saying that we should have held up withdrawals for everyone who had an open futures position, um, for clawback potential or something like that. I don't know. Maybe that would have been the right thing to do. I hear where you're coming from on that. Um, I felt, at the time, that we wanted to treat customers equally. It was an incredible.
But they had agreed to different things, so you can't treat them equally. I mean, it's like, this is the whole problem of the story of FTX and Alameda, is all the funds were being commingled. Isn't this just another story of commingling funds, except this is now FTX, which you can't pass the blame to Alameda anymore. This is your company, your funds, that you are treating all the clients the same when they clearly signed up to different terms of service.
So I just want to respond to that. And please, I completely respect your question, but you have monopolized all of these discussions, Coffeezilla. You need to let others speak, and you need to respond to what I'm saying and not grandstand as much here. I completely understand where you're coming from. But to answer your question, I didn't make a decision there. We processed withdrawals as we normally do until it became clear we couldn't anymore, at which point we shut them off. And it was the case that, like, at that point, there was a big liquidity hole. That's what happened. If you want to judge that process and think that, like, we should have been spending those days frantically trying to code up a new withdrawal process, I disagree with you, but I understand where you're coming from.
Yeah, sure. I think that's fine. I mean, it's not about coding up a new withdrawal process. It's about treating your client assets the way you told them they'd be treated, right? It's a very different thing completely. But anyways, I'll stop grandstanding for Sam. Thanks, guys. Oh my gosh. Woo! Oh my gosh. Wow. We got the call out. We got the shout out. Sam Bankman Fried is a kid who grew up sort of from a position of huge privilege. Both his parents are lawyers. I believe both of them were from Harvard. He went to MIT, backing up a bit more. He went to like this top prep high school, then to MIT. Then he went to Jane Street. And after that, he started a trading firm in, I think, 2017 called Alameda Research with a few friends. Some of them were from Jane Street. Some of them worked at Google. And they were sort of the smartest kids on the block, or that's what everyone thought. They made a lot of their money on something called the kimchi premium, or at least the story goes, which, just to explain that, the price of Bitcoin in Korea was substantially higher than in the rest of the world. And so you could arbitrage that by buying Bitcoin elsewhere and selling it on a Korean exchange. So they made their money early doing kind of smart trades like that. They flipped that into market making, which they were pretty early on that. Just providing liquidity to an exchange. And it's a strategy that is considered delta neutral, which means basically if you take kind of both sides of the trade and you're making a spread, like a fee on that, you make money whether it goes up or down. So in theory, there shouldn't be that much risk associated with it. So Alameda kind of blew up because they would offer these people, people who are giving out loans, they'd say, hey, we'll give you this really attractive rate of return. And we're doing strategies that seemingly are low risk. So we're a low risk bet. We're these smart kids from Jane Street, and you can kind of trust us to be this smarter than everyone else kind of thing. Around 2019, Sam started FTX, which is an exchange. Specifically, it specialized in derivatives, so like margins, kind of more sophisticated crypto products. And it got in with Binance early on. So Binance actually has a prior relationship to FTX, which we'll explore in a second because they're going to play a role in FTX's collapse, actually. Binance is the #1 crypto exchange, and they're led by, he's called CZ on Twitter. I don't want to butcher his full name, but really smart guy, has played his hand really well and built up a quite large exchange. And Binance was funding a bunch of different like startups. So they helped invest into FTX early on. They invested $100 million.
So these guys were kind of like teammates early on, SBF and CZ. And FTX quickly grew. They got like, especially in 2020, 2021, they got a lot of endorsements. They got a lot of credibility in the space. And eventually, FTX actually bought out Binance. They gave them $2 billion. So pretty good investment for CZ in a couple of years. And now lead that up to 2022. What happens? Luna collapse, Three Arrows Capital collapse, which if you don't know, there's just these kind of cataclysmic events in crypto led by some pretty risky behavior, whether Luna was a token that promised really attractive returns that were unsustainable ultimately, and it just kind of spiraled. It did what's called a stablecoin death spiral, which we can talk about if we need to.
Stablecoin death spiral. I can't wait till that like actually enters the lexicon, like a Wikipedia page on it, like economic students are learning it in school.
Yes.
That's like a chapter in a book. Anyway, I mean, this is the reality of our world. This is a really big part of the economic system is cryptocurrency, and stablecoin is part of that.
Yeah, it's weird because on the one hand, cryptocurrency is supposed to somewhat simplify or add transparency to the financial markets. The idea is for the first time, you don't have to wait for an SEC filing from some corporate business. You can look at what they're doing on chain, right? So that's good because a lot of big financial problems are caused by lack of transparency and lack of understanding risk. But ironically, you get some people creating these arbitrarily complicated financial products like algorithmic stablecoins, which then introduce more risk and blow everything up. So anyways, Three Arrows Capital blew up. And all of a sudden, this crypto industry, which everyone thought was going to the moon, Bitcoin to 100,000, is in some trouble. And FTX seems like the only people who, besides like Binance, who's also really big and stable, and Coinbase, they seemed like they were doing fine. In fact, they were bailing out companies in the summer. I don't know if you remember that. SBF was likened to like Jamie Dimon, who's the CEO of Chase, who like kind of was like the buck stops here. I'm like the backstop, right? So SBF was supporting the industry. He was like the stable guy. So come to like around October and November, there's all this talk about regulation. Everything's been blowing up. SBF's leading the charge on regulation. And CZ, the CEO of Binance, gets word that maybe SBF is kind of like cutting him out or making regulation that would maybe impact his business. And he doesn't like that too much. They start kind of feuding a little bit on Twitter. So when it comes out, a CoinDesk report came out that FTX's balance sheet wasn't looking that good. Like it looked pretty weak. They had a lot of coins that in theory had value if you looked at their market price. But for a variety of reasons, if you tried to sell them, they'd collapse in value. So it's sort of like this thing, a house built on sand. And a friend of mine on Twitter, he goes by Dirty Bubble Media. He released a report and he basically said, I think these guys are insolvent. Well, CZ saw that and he retweeted it and started adding fuel to the fire of like the speculation. Because up to this point, everyone thought FTX is super safe, super secure. There's no reason to not keep your money there. Tom Brady keeps his money there, whatever. And CZ kind of adds fuel to the fire by saying, not only am I retweeting this, adding kind of like validity to this speculation, but also I'm going to take the FTT that I got, which part of their balance sheet was this FTT token, which is FTX's like proprietary token. And Alameda and FTX controlled a lot of it. They were using this token to basically be a large amount of collateral for their whole balance sheet. So it accounted for this huge amount of their value. And the CEO of Binance had a huge chunk of it as well. And he said, I'm going to sell all of it. And the fuel that introduced to the market is if he sells all this FTT, and this FTT is underwriting a lot of the value of FTX.
Well, this has been such a fast-moving story, and we're really now waiting to hear any more news about a potential extradition.
That's right, Heidi, that's what we're waiting on. But essentially what's developed in the last few minutes here, as you say, Sam Bankman Fried has been arrested in the Bahamas, and we got that confirmation from the Bahamas Attorney General. And he put out a statement saying essentially that Sam Bankman Fried's arrest followed a notification from the US that had filed criminal charges against him. And as you say, yes, the US is also likely to request his extradition. So as a result of the notification, the material provided within it, the Attorney General said it was deemed appropriate to seek that arrest and to hold him in custody. In that statement from the Attorney General, we also had a quote from the Bahamas Prime Minister, and he also said that the Bahamas and the US have a shared interest in holding accountable all individuals associated with FX who could have betrayed the public trust and also have broken the law.
So, Belle, where are we in the US investigation?
So the Southern District of New York has also put out a tweet on this. And so essentially what we're hearing here is that the arrest, as you know, was made at the request of the US government. And it was based on a sealed indictment that was filed by the SDNY, so the Southern District New York prosecutors. Now, we know that this team has a reputation for spearheading investigations into very complex financial crimes. And the scope of that investigation is also something we've been watching very closely at Bloomberg. And so what we know from our sources here at Bloomberg, at least, is that the new management team at FTX, which is being led by John J. Ray, they met with those prosecutors. They are the group of officials that are leading the DOJ investigation into the collapse of FTX. We don't know exactly what they're looking at so far in terms of, we know that they're trying to get in touch with anyone who had links to crypto firms. Also, whether Sam Bankman Fried engaged in market manipulation. That's something else that's been reported by the New York Times. But we do expect the prosecutors to unseal the indictment in the morning US time, and then we could have more details exactly on what is included in it, Heidi.
Where does this leave us when it comes to the House hearing? Because we already had prepared remarks from Sam Bankman Fried, along the lines of really what he's been saying in media interviews over the past few weeks, which is admitting to managerial missteps, but not admitting to any wrongdoing or fraud.
Yeah, that's right. Essentially, this was on Twitter, where he sort of gave the scope of what he planned to cover in these hearings. He was scheduled to attend the House one on Tuesday, though he had not said he was going to be attending the one in the Senate on Wednesday. But essentially, yes, the scope of what Sam Bankman Fried was really along the lines of what we'd heard before. He was interested in detailing more of the details of the FTX collapse, but essentially he was still focused on sort of exonerating himself from any sort of real culpability in it, because he was also really focused on trying to let people know the man that he could have been, even though he, of course, had made some mistakes in the past. But yes, that was really something that was going to be the key headline for that. We also had the prepared remarks from John J. Ray, who is the acting CEO, the man in charge now at FTX, charged with cleaning up the mess from this. And again, he had sort of really stressed those same sort of talking points that we'd heard in the past from him, essentially that this whole collapse of FTX really is something that had happened as a result of concentrating so much power and money into the hands of such a small group of people that really lacked any sort of sophisticated market knowledge or information.